Good morning, everyone. It is Wednesday. Welcome to the Euro Trade. My name is Marcus D. If you've stumbled onto this stream randomly, I've been trading for 18 years. I'm a Series 3 qualified trader, and I specialize in some of the more unusual products that you don't see all that often, mainly precious metals and energies markets. All right, let's have a look at what we've got. I'm scanning things around, and one of the products that I'm interested in today is copper, actually, because copper went into a pretty nice overnight move. It did exceed the average daily range low, and it is also in a negative gamma environment, so the exhaustion of the ADR is right around 450, maybe a couple of ticks lower. And I've just looked at what we have for the options chain. We do have a negative gamma condition, which is basically higher volatility environment. That means that any moves that we may see today are going to be a little bit more amplified. I've scanned through all the other things. Most of them are in a lower volatility environment, but copper being copper, it has a story of its own. So we may want to focus on the levels and the LME open, which is going to be a little bit later in a couple of hours time. So yeah, let's see what they do here. For now, this average daily range low is not giving too much of a reaction, but what typically happens is when the ADR is overshot or ignored, is that we may have a possibility of a single direction day lower with the direction of the exhaustion. So what I want to do is to maybe look for some kind of a pullback, maybe around the nearest gamma exposure level, and see if we can match it with some of the existing areas. Like, for example, we have the LME value low sitting at 451.90. So I'm going to mark all of that on the chart. Actually, maybe let's just make this bigger, because I don't think I'm going to be doing gold today. Change that to purple and solid. So that is London Metal Exchange value low. And copper is traded a lot for the LME. The value high is located at 453.95. I literally just sat down to do the charts, so we're doing this as I do it usually before we begin, but I figured maybe you want to know the process. Do we have any sort of a well-defined low for Asia or high? That'll be a no. Sort of a well-defined high around 450, 450. So that's all higher up. Now, projected volatility for today using the options chain rather than ADR is actually sitting at 447.95. Oh, police car. You don't hear that a lot around these areas. We also have a put support level at 450. And then the GEX level with the highest concentration of open interest is around 451. So what I'm expecting the LME to do is to potentially give a little bit of a reaction to the opposite side because of this ADR here, because there's almost always a bit of a reaction, and then to continue the day down. That would be the primary hypothesis for the day. Why am I saying that? Because the average daily range is so far ignored. They didn't have any sort of a reaction around it. And that tends to open up the possibility for a unidirectional day, so a single day down. But just out of interest, let's scan through very large time frames, even though we know there's that big smash. And I do have some other levels that I'm just gonna, and that palm tree that we were drawing a while back. Should do more emojis. Okay, so as you can see, after this huge meltdown, we never really recovered properly from it, right? It just kind of stayed range bound, and now it seems to be continuing lower. So, you know, do we want to fight that? Not necessarily. There were some pullbacks in and around the area where literally just tagging. This is a new contract. It is a new contract. But if we scale out massively, I could say that 435.85 is the area of a nearest demand area, demand zone. On the monthly chart, similar. So this is edging towards that lower area of a demand. So maybe we can see whether it can get there by the end of this month. That is old, so it needs to be deleted. Okay. 4-hour chart. A week ago, we created a localized demand area. It's being ignored. It's not a very good quality area either. The move away from it is gradual at best, and then it took like a little bit of time to actually pick up any sort of speed before they brought it straight into the demand again. So the time of price staying away from the demand zone is not that good. I also don't think that the profit margin on it would have been that great either. So I don't think this is going to cause too much trouble, maybe a temporary bounce, and then we can see copper melting through some more levels. So that is definitely one of the hypotheses. So that's like looking at the overall time frame, big context picture. When I look at it on the intraday time frame, I do think that Asia took it a little bit too far, which is why I would like to see LME reverse it and effectively just do a little bit of a pullback and then hit one of these important levels, right? When it comes to intraday movement, this is a pretty smooth move down, and I wouldn't be surprised if we start rising up through it. How big of a reversal, I don't know, but I'm not sure I want to be actually on that reversal unless I see something super obvious. Like let's say that we establish a range in the lead up to the LME right where we are now. So we don't keep going, but we basically are not able to carry on lower. That will be opening up the potential for a similar thing to Frankie fake out, which is effectively a well-defined overnight low that then gets swept, and then you have a stop run and reverse sort of moment during the first half hour of LME, and then we reverse. Now if I see that, that's a different setup, because then it's a fake out of the previous session lows and a reversal. At that point I may want to go into that mean reversion long, but for now I have nothing telling me to do that. So we need to allow this to develop a little bit more and to see exactly what they want to do with it. So there are potentials on both sides of the story, and if we do get that that set up, then I want to see us reclaiming 450, so we cannot be too far away from that area. Alternatively, if we fall all the way down to 448 and then start to range, that could be another option, because that's another strong level. But yeah, some options, but nothing imminently that's like screaming at me, going, "Take me, take me." Let me just get my Cavalier back into the office. I'm going to leave the camera on and everything so you can hear. Welcome. Welcome, Leonard. So my co-worker has arrived. In fact, Leonard is more my boss because I'm his butler. Leonard is my deaf, almost 13-year-old King Charles Cavalier. And he is quite a dude, but also one of the most stubborn dogs I've ever had in my life. Theo says, good morning, or is it good night, or is it morning? Well, over here in my part of the world, it's morning. So it's 9:44 in the morning. Yeah. Andrea says, hello, I'm new to your stream. What do you usually trade around this time? So you're on fast market with some gold and oil, if I remember that correctly. So Andrea, so here's the story. Now, those of you who have been here for a hot minute, you know that we started these live streams a year ago with the idea that we're going to trade DAX, because I normally around this time of the day I do trade DAX. Now unfortunately we never really got DAX due to some technical issues, and then I just got stuck sort of trying to trade things that are not really moving. So basically we're trying to see how we can maybe move this to another, I don't know what we're going to do with it. There are a couple of ideas, so we're going to see what happens, but generally I tend to give you more of an overview, and you should look at this more of as an educational way of how I look at the markets, with some slightly more unusual approaches like market profile, the option chain levels, because I do use the options levels as kind of an orientation to come up with a high post to see whether we are in high volatility or low volatility environment, because you can't see that in the options market. And then I will basically try and express my views in one of the products that I'm seeing, but it doesn't mean that it's going to be at this time of the day, purely because the whole DAX idea fell through. So now we're just brainstorming how and what to do with the Euro trade. But yeah, I am primarily a precious metals and energies trader. In fact, I've been a prop trader since 2013, but I actually started trading my own cash in Forex, swing trading, only Euro dollar. So I did that for 5 years, did really well. Then at one point I thought, hey, I really enjoy this. Let me stop being a session musician that I've done at that point probably for about 15 years, and then go, I'm just going to abandon all of that, because I was getting a little bit older and couldn't really sit on tour buses and planes and vans and a whole bunch of transportation vehicles, because it was tiring me out. And in the end, I went into prop. They put me on an equities desk. Back in 2013, ES was moving like 20 ticks per day. So it was like that odd period after the credit crunch. I didn't like it. I really didn't like it. So I said to them, my God, I would rather go stick pins in my eyes. What is this? Why do people trade ES? And they said, okay, so maybe you don't like equities. Let's try you on something more volatile. So they put me on an energies desk. And I found crude oil amazing back then. It's not so amazing now. Crude oil is going through some macro things where they're trying to keep it really stable at a very particular price range. And that is bringing us just some movement. Like the crude oil of today is not the crude oil that I started on. And the whole dry up of crude oil started happening sort of in 2024, maybe the end of 2023. Then we had a terrible 2024. However, there are still energies markets that I really enjoy. So they are largely derivatives of crude oil. So we have RBOB and we have heating oil. So I do trade those two, probably RBOB a lot more than heating oil, to be honest. And then we also have natural gas out of the energies market. So those were my main markets. I was primarily an energies trader. But because it's so early in the day and we still don't have the regular trading hours that will bring us any interesting moves in energies, I also traded precious metals for quite a long chunk of that prop career. So I'm focusing on precious metals. Depending on what we have going on, I will flip between copper, platinum, sometimes silver, gold, and that's what you will see me trade on these streams. But yeah, it's August. I don't know whether I'm going to do a trade right now because, like I said, LME is not open yet, and technically precious metals go into this weird holding pattern for this time of the day because we had the Asia market, you know, that closed. And then London up until the LME opens, which is actually one of the largest exchanges for the precious metals in the world. And they're very much involved in putting the official pricing for the metals. Don't know how much movement we are actually going to get. And the way I trade, I'm very systematic. I have certain time zones of the day that I look at for very particular setups. And unfortunately for precious metals, it just so ended up that this is not it. This is my time of day when I traded DAX. So yeah. And actually a lot of the times when I'm talking, I will actually trade DAX in the background. But because we don't have DAX on Topstep, I'm not going to be doing that because there's no point, you know. Then I get flooded with questions. When is DAX coming? And it's like, we don't know. At some point, it might come, but we don't have a timeline at this point. Yaren says, for me, I like the idea of less trading and searching for trades and more market analysis and going deeper in your system, risk management, and emotions management. Yeah. Thank you, Yaren. Shane A says, Deeyana, what's the key to payouts with Topstep? Small wins or one large when it opens up? Honestly, that depends on the market conditions, Shane. I have done both. If we are in a quieter environment, I will take singles, range trades. I don't like them, but you know, if the market is not giving you anything else, then that's it. As far as the one massive trade that you just sort of full ported on and then got lucky on, I don't think that's very sustainable, man. I'm going to be very honest with you. So my payouts from Topstep were always as a result of process first and then everything else, right? So you basically build consistency so that those payouts are not just few and far between. You're just like, I did a payout now and then now once in a blue moon, once I go through a turn and burn situation, or I might get another payout. But to me, that's always like indicative of somebody who doesn't actually have the skill level where it needs to be. So I will always preach consistency over full porting and getting lucky. Or, you know, sizing up so much that your risk of ruin is sky high. If you don't know what risk of ruin is, I do have an older video from about 2-3 years ago on my own channel, because I do have my own channel. So check that out. Topstep have kindly put it underneath this video. So there's my Twitter, which I don't really post much on there. Can't be bothered in FinTweet, Finex drama. But you do have my YouTube underneath. I am trying to revive that at some point, so I started sort of posting a little bit more. And when I say a little bit more, like twice a month. But I do plan on reviving the channel. It was a fairly lively channel for years, but then I had some health issues. So, you know, life happens, and we're just trying to push through it, just like everybody else. So yeah, the key to payouts, I wouldn't full ports. I wouldn't try and swing for the fences or every day sitting down and trying to get home runs, right? I would not do that. I would aim for consistent singles and doubles, so 1 hour to 2 hours, and then just trying to rack them up day after day after day after day while keeping your losses controlled. So, you know, getting lucky and then getting a payout because you got lucky for a week. And remember that you have to have 5 days of $150 before you can even take a payout. So full porting and swinging for the fences is just generally not going to work, right? And I don't know whether any prop firm would allow you to do that. Andre actually not too long ago mentioned a guy that full ported his account in a prop firm that he was at, and he made like a ludicrous amount of money. He made like 70, 80 grand, right? He got marched out of the office and fired on the spot. That's how it used to be. Because he broke the rules, right? He had a certain risk limit, and he had a certain contract limit. He decided to go over that. Because back in those days, you didn't have all of these like fancy tools that we have right now. So, Topstep, love it or hate it, they have changed the game with the risk settings. So they're the first ever prop firm to bring us the risk settings that come as a part of the combined purchase, right? So you pay $49 for a 50K account, you get a full-on risk software, And I think others will follow because it is disruptive to the industry. Because it's like, do I need to say anything else? So we didn't have that back in the day, but you had an agreement with the risk team that you will trade a certain amount of contracts. So naturally, it was a trust thing where they would trust you to hold up to that end of the deal, right? And this guy didn't. So he just went, I don't know how many contracts he had. And yeah, they fired him. So think about that. Prop don't like people that don't follow rules, yeah? Shane A. Gold moves at this time. Well, you will see. Let's watch gold. So here it is. 30-minute time frame. Let's see whether it moves. It might be an outlier day, but in my experience, we get to ballpark an hour this time of the day, and it just establishes a range. And then you have the LME open in 2 hours' time, hour and a half, and then it starts moving again. So let's watch it. That's what I say. Probabilistically, we should have a range established in gold for this time of the day. Look, there are outlier days when, yes, it does move, but there are outlier days. You'll find them like once every 2 weeks, gold will move for this time. Probabilistically, that's not what I want. I want something that moves every single day and increases in volume, okay? Right now, again, August, NVIDIA earnings later today. It's not the best time of day for gold. Right, let's have a look. Hardeep says, morning D, after my last payout, I blew my Forex away. Okay, here we go again with Hardeep blowing up. Dude, you're in a churn and burn situation. Size down. Size down. The reason is I never use a daily loss limit. Well, there you go. So who have you got to blame? I'm sorry, I have no sympathy here, man. Like you've done the neuroscience stuff when we had the neuroscientist. You asked so many questions. We gave you the answers, and then you just threw it back in our faces. So you're very busy and you have a family. It's like, well, how is that preventing you from putting a daily loss limit and putting some shackles on yourself? Because you obviously go overboard with your emotions and you can't control them just yet. You're not very self-aware of what's going on up here between the keyboard and chair. Yeah, PBKC errors all over the place. If you don't know what PBKC or PBCAC errors are, Google it. And again, contract limit 20 micros. You're insane. Like 5 micros, man. Especially if you trade NQ. 2 micros. Like you're just swinging for the fences. Up, down. 6 grand up. 10 grand down. 2 grand up. 4 grand down. That's not good. It needs to be, 6 grand down. 2 grand up. And then, 600 down. 2 grand up. Maybe 800 or 1,000 down, but then 3 grand up. If that math does not work, you have a disparity between your ability to make something on the day and then inability to control your losses on other days that should be smaller than the average of your winning days. So take it as you will, but I'm sorry, I can't be patting people on the back and going, oh, poor you, I'm so sorry. I'm not one of those, right? You okay? It's like you keep doing it over and over. Somebody has to go, oi, stop it. So use the daily loss limit. I see that you continue and you're using, loss limits and everything. So here's a huge tip. I showed you the risk settings. The very first thing, if you're struggling to stick to your emotions, right? Before you start, figure out what your daily loss limit is. I like to use the average of your winners and then make that into a losing day, especially if you can rack up streaks of 3 to 5 days, okay? Especially if you can rack up streaks, because then one losing day of the average of all of the winners is really not going to hurt you much. If you're finding them one day up, one day down, one day up, one day down, one day up, one day down, and, that's not a good thing. So then I would just divide the maximum loss into 10 or the account balance, if you've built up some balance in your XFA, divide that by 10. That gives you 10 full days to stock and before you blow out. So you're not going to be blowing out in a day or two. But before you do anything, set all this up, lock out risk settings for the day. Do not do any trading before you do this, right? This will save you. And then you have no option. You have to follow the rules. You just tell your brain, okay, we're now stuck. There's nothing. There is nothing. We have to follow rules. Okay, so Hardeep, sorry, I didn't finish all of your things. So in this account, first thing before trading is locking out my risk settings for these 6 days, and I requested a payout today. Yeah, so keep doing that, Hardeep. So that's a huge difference. I thought you were just moaning about churning and burning again. So I was like, okay. But yeah, so you've changed stuff. You've changed stuff. So now you've grown as a trader and you're doing steps to prevent you from repeating the same mistakes. That's very commendable, right? Sorry about being a little bit harsh, because I thought every time I saw you before, you were always bringing us bad news that you were blowing up your XFAs again. So I felt bad for you, but at the same time, you weren't changing things. So I'm glad to see you changing things. Well done. Full praise for changing things around in your routine to stop yourself from going on tilt on days where the markets are irking you. Paul H says, I think people don't get that Topstep have full visibility over your XFA. Once you get to an XFA, they are watching you. They are, yeah. As soon as you hit 5K, you get on their radar. And they're like, yeah, let's see what this person's doing. Anastasio says, good morning, Deeyana. Would you consider GC having a failed downside auction at this point? No, because of the fact that LME is the main thing moving around these days. Now, here's the thing. When I was really actively trading gold, we didn't have LME because they shut down. I was probably trading it a lot more during COVID and for the 2 years in and around COVID because my crude oil, they stopped trading crude oil, so I had to default to some of my other products because there was no crude oil. It went to negative, and they suspended trading for I think about 2 or 3 months. They didn't bring it back. So back then, because the LME was closed, we were missing a whole bunch of volume. So the only volume was COMEX, and then I traded COMEX almost exclusively. I did not trade London. I traded DAX, but I did not trade much of gold for this time of the day. And then they reopened LME, sort of, I think it was September 2021 or 22. Don't quote me on that, but it was literally about a couple of years after COVID happened. And then we started seeing this dry up for the London session, because I went back and I looked, and I'd done a lot of looking. So I've realized that gold, more often than not, will now consolidate for the actual London Open. There's a little bit of movement, but then once we get to 90 minutes into this session, it just slows down, starts ranging, and stops making very nice movement. You can even see that the volume is already dropping off on the 15-minute time frame. And even though they're trying to push above VWAP, if previous stats are to be believed, we're going to establish a very tight range here, unless there's some news. Obviously we could always have a catalyst that changes things, but I don't think I saw anything. So let's have a look on my other screen. So first up, do we have news? Meh. Nope. There's some China news coming up, but yeah, nothing there. Let's have a look at financial juice. The dollar slipped as traders offloaded longer dated US Treasuries following Trump's bid to oust Fed's cook, stoking fears of the outlook for inflation. So yeah, that could have been a little bit of a push for the gold because the dollar weakened. So yeah. Let's have a look at 15 minutes here. So copper and gold, that's what we're watching. So see this, can you see that volume drop off? Can you see volume? You cannot see volume because I'm blocking it. Okay, you can see volume now. Yeah. So the volume just goes, and that is not very conducive for a continued move up. It might be a zombie rally, right? But VWAP, what else do we have? We have nothing. I have nothing. Bit of Whitney for you. Yeah, I only have levels higher up. Right now we're in the middle of GEX levels. So, and if we run out of steam, so there's two options. We either go back up to 3440, which is not a very it's not a very strong GEX level. Neither of these are actually, but the highest concentration of GEX, so the two magnets that we might see, is 3420 or 3440. There's really nothing else in here. Bab J says, D, what do you think about 10 contract micro ES? I think if you're scaling in and out, fair enough, but I'm not in favor of it because it's cheaper to trade one mini. So if you don't have a strategy to keep scaling out or scaling in, I would just move to minis at this point and not mess around with micro commissions, because commissions on micros compared to minis are mind-boggling. So if you don't have to, don't trade multi. In fact, anytime I go over like 6-7 micros, it's just more, especially if you trade a lot, it's more beneficial to just go to minis at that point, because it gets really expensive on the commissions for micros. Like we had that one guy who was trading XFAs, but he did like something like 18,000 micro contracts in a day. And if he had been in the live markets, he would have accounted for, I think it was something crazy like 13% or 15% of the overall micros volume of the day. And then, you look at his P&L and a lot of trading, and he was sort of profitable. I think he blew up pretty much soon after that, but he effectively had half of his P&L that he generated was eaten up by commissions in micros from the 1,800 contracts that he was doing. Was it 18? I think it was 1,800, or was it 18,000? It was like a mind-bogglingly high amount of micros. So, yeah. Do I use CVD? Yeah, I have it on Bookmap usually. Again, until there's something, either like a sharp increase or decrease in CVD, or if there's like a heavily positive or heavily negative delta, and or delta divergence, where the price is going one way but delta is going the other way, indicating there's a disparity between the aggressive buyers or sellers, but the price is not really doing anything in their favor, so therefore they're getting run over like a steam train. I'm not too bothered by delta, so obviously I watch it, but there are very particular events that I want to see in relation to CVD. Or is it cumulative? Yeah, cumulative volume delta. Yeah. What indicator are you using? Okay, so look, any indicators as you see on my chart, they're not, oh, buy here or sell here. They're simply a lens into situational awareness, into market behaviors that tell me what the state is. So on this particular chart, I actually have a visible volume range. That's this thing here. I have 3 moving averages, so anchored to different points. So one is a 16 EMA. Sometimes in higher volatility environments, I will get that down to 9. But since we're in a slower environment, I wanted it smoothed out. And they're anchored to high, close, and low of the price. And I have VWAP. But these are not my main charts. I use TopstepX mainly for execution. My charts look like this. I mean, you can change them to black as well. So this is my main charting. So you can have them like this. I like it white because I'm old and my eyes don't work as well as they used to. I'm getting that like mid-40s eye muscle weakening, so I do need readers on some days, especially if I'm a little bit tired. And my prescription has actually increased, so I need to get a new pair. But yeah, so this is what I have. So usually if we are in, let's put some other things here. So I have the TPO profile from the previous day. Here I have panels that tell me where we open. I have the average daily and session ranges telling me this. I have the better volumes, and this is on my company. This is what we do. And at the moment they're only on MetaTrader, but we are using AMP, so it's real CQG contracts. Why? Because I started trading a million years ago, and that was the most popular platform back then. So this is AMP futures, so you see CQG, real futures data. But yeah, those are my charts, and I can do something really cool with this, where I go back in time, and I can see exactly how the market reacted, and where it reversed, and how. So we opened below Tokyo value, and we went into a short. Then we retested Tokyo value low, and then went into massive short. So this was what I call the outer value edge test and a continuation. So that is something I keep on my other screens, and I stare at that all the time. So those are my main charts. But on TopstepX, I just use it for the dome. It's more of an execution platform for me at this point. Because, you know, you don't want to, like, here's the thing. After 18 years and after 13 years of being a prop trader, every single prop firm had their own idea of an execution platform, right? So through many of them, you always have the bigger firms that will want their own thing. So, you know, there was Bloomberg Terminal. Then some people were using this thing called Fusion. Then, you know, we went into a company that was owned by First New York, and they had their own systems, and then an entire IT department that only worked on their systems, but they also had Bloomberg, so as an offering. So, prop firms would change platform offerings every so often, right? And if you've only been trading for 2 or 3 years, maybe that's not your experience, but you're still very new. But just know that every few years, the whole market shifts toward a particular platform. So for a time, that was Ninja. Then we had ATAS and Quant Tower came along. Then we had Tradervate suddenly came along. Back in the day, it was CTS T4. So it's like, this is like a normal thing. And for me, to have to change my entire charting software every time a firm decides to change the platform offerings is not something I want to do. I'm getting older and older. None of us are getting younger. For me to keep having to learn and relearn all these platforms past the basic sort of functionalities, and mind you, I'm a nerd and I do code as well, so I am pretty tech savvy, quite tech savvy, borderline, I would say I'm geek, but borderline nerd, right? So to have to change with every few years when the industry sort of shifts to one thing or the other, I just can't be bothered anymore, right? So I stuck with my own charting that I'm comfortable with, that I know what I'm looking for, that I've spent a lot of money commissioning the software architects to create something that is really special, that doesn't break your platform, that doesn't lag, that has the backtest directly on the chart, so I can quickly just go back and scan to see what's happened yesterday and the previous day for as long as I've got history, and to have my data there. So whatever you see me using on TopstepX, it is only a shell of the things that I'm looking at, okay? And I think that we have a ways, like just being super honest here, I think we have a ways to go before we can replace any sort of charting, especially those of us who have been trading for years. We're used to certain tools and we use them in a certain way. And I even have a whole other business around my software development side. So, if I can't tell what my average range for the sessions, different sessions are at a glance, I would need to sit down and then code that up. But at this point, we don't even yet have the ability to create indicators on TopstepX because they are effectively, they created the API and you can create trading stuff on there. You can even create like dashboards and a whole bunch of other cool stuff. I'm terrible at like GUI and like the user interface side. I absolutely hate doing that. So when I'm coding, it all just looks very dry and it's all just, data that I need to have in code. But I don't really ever, apart from a log, I don't actually ever export it in as like a graphical thing. If I need something graphical, I will use AI for that because I absolutely suck at drawing things via code. It's like the bane of my existence. So if you tell me matplotlib and I'm like, get away. VP, take a breath. Take a breath, go for a walk, have a ham sandwich. Oh yeah, the Bloomberg. Mo, you're absolutely right. Yeah, Bloomberg is like 24 grand a year or something. It's an arm and a leg. And that was a part of the reason why the desk fees were so high. So you were effectively paying for the Bloomberg license per user, because you can't just get like a general license and you add team members. No, Bloomberg doesn't work that way. So per user, so anytime you get a new trader, they, as a part of their desk fee, would pay the 1,500 for their own terminal, Bloomberg terminal, yeah. And then they would also charge you other fees, because my desk fee was 3,200 at one point. And I think out of all of us, I think Jack had it the worst. I think they had like 5 or 6 grand for a desk fee, but he did work in a very, very well-known massive firm. I didn't work in like sort of top of the line. I started off in Infinium, but then they went bust. I actually went back to London before that happened, but that was where I did my apprenticeship, so they taught me certain things. And then in London, I was with Amplify for a while, but I kind of felt they were more on an educational side than like a really serious firm, because they had this deal with schools and they had a deal with universities to kind of train people. So yeah, I stayed there for a while. And then after that, I was looking for kind of a more, I don't know, more just prop firm. And went to one of the firms that is owned by First New York. So stayed there for a while. And then I decided to go remote prop firms. I spent 3 months in one of the asset management firms. Absolutely hated it, so I never went past the trial period. They wanted to keep me. I just said, I don't think this is for me, because it was a weird combination of like frat boy culture, and which I don't really mind all that much, but it was also very corporate on the other side. So on one side you're almost being like harassed by the men in there, and on the other side there is an HR department. So I'm like, how does that work? So I'm not really sure about this. And I come from the music world, and gold is settled in a range. So who said gold moves at this time? Who said that? Who told me that gold moves at this time? Do you call this movement? Let's see. Here we go. This is the range we're working with. You lied to me. Gold does not move at this time. So this is what I was talking about, right? How gold gets all a bit lackluster at this time of day. And here we are. Where are you? Where are my projected things? Price range. There we go. So since I started, we had a whole 43 tick movement. And then it's just now in the last 45 minutes, it has been stuck in a lovely 30 tick range. 30 tick range. Rock on gold. Oh my god, it's so much movement. What am I going to do with this range right now? Yeah, and this is where I would rather go stick pins in my eyes than trade a 30 tick range. But hey, if you're chasing 10, 15 ticks, that's great. To me, that's a waste of time. I like to capture. Like that gold trade that I was in on yesterday. So I tried twice, and then it was only a micro, because again, we're still in this weird August thing. So I'm just kind of aiming for very small days of like 100, 150, 100, 150, and just kind of trying to not dig any deep holes. So I do allow maximum 175 per day whilst the summer weirdness is happening. So once that's over, I can start looking at slightly bigger positions. But so that micro trade, let's have a look at charts and data, show chart executions, then go back here. MGC, let's go back to yesterday. And 30 minutes, was that yesterday? No, that was the previous day. No, that was yesterday. Yeah, so tried a couple of times, got smacked in the face, and then finally got in. I'm going to need to go down to a lower time frame because it's all overlapping. It's all overlapping. So yeah, tried a couple of times, small losses, and then grabbed it at 34.19.3 and held it all the way almost to like the end of the day for the auto liquidator. But as soon as they started to mess around here, I didn't want to hold it. So I took, what was that? Let's calculate that. And again, this is not an everyday trade. It really isn't. So that's 34, 3, 8, 6, and 34, 3, 193 ticks. 193 ticks profit. So, you know, you can take 5 or 10 ticks, but when I see a day like that, where it was like a single direction day, why? Because we already exhausted the ADR high in Asia. And then we had a bit of a squiggle down. That's what I was trying to catch in the first couple of trades. And then does it matter that I took like 15, 20 ticks loss on 2 of them? No, because I made 193 ticks. So that's what matters, right? But there are days when it's just singles and doubles, right? Singles and doubles. And yesterday, I identified that that wasn't the case. So I was like, I want to catch this. I want to be in on this. But yeah, time of day right now, a little bit weird. So you might hear my cavalier coughing. He has a pretty bad heart, poor boy. All right, bit of a reversal from that ADR low on copper. So let's watch what they want to do here. Still no LME open. So really, in the most ideal world, I want to see it go up somewhere near ballpark, somewhere near this area, maybe even higher. Like, look, if we can, you know, get to some better GEX levels, because all of these are a bit meh. So even if we get to 54, 55, I wouldn't mind shorting from there. So basically go into value, acceptance, rotate through value, and then maybe get to the top of this swing that we had before. Now, this is Globex open, so you could say this is Asia high. So maybe another setup could be all the way there, and then maybe COMEX smashes through that and reverses and starts going down. It's an option. But for now, time of day is wrong for this reversal, so really I still want to be short. So if LME opens, if they fake it out to the downside, then reverse, but we still maintain 450, could be a long. But if they just continue to go higher and higher and higher, and then we either get to 452 or to 455, either at second half hour of LME open or post and card COMEX, maybe even second half hour of COMEX. I don't know. It depends on the time of day, right? So wherever we are at that point, I have different price points where I know whether I want to be a buyer or a seller. I very rarely kind of flip and flop, going, I'm going to go long, I'm going to go short, and it's all like around the same price. It's like the fastest way to dig a hole. Paul H is back, okay. Okay, let's have a look at the chat. Did the Bloomberg mean you could trade any better? No. In fact, it was a cancerous platform that looks like it was made in the 80s, which it probably was, but they haven't really updated it. It was like, look, you could trade anything. On Bloomberg, you could trade even like forwards, which are very odd contracts. You could trade options. You could trade, like literally, you could do swaps. Like any product and vehicle that you could imagine can be traded on Bloomberg. So that is its power. It's a very kind of institutional thing. But like in one time, I tried to find market profile inside it, and then they had the clunkiest version of TPOs. The most unintuitive profile that I've ever seen in my life. All I wanted to do is change the start times. And they had it like for the entire 24 hours. So I'm like, I just want to look at the RTH. I spent 40 minutes trying to look for how to change the time. And then I found it, and then I changed it, and it didn't work. So I had to get an IT guy to show me how to do it. Me, a nerd. It was like, horrible platform. I do not like. I'm glad I do not trade through it anymore. At one point, I had some of my my longer term positions and portfolios in there, but that was a long time ago. Long time ago. Right, so we seem to be reclaiming the ADR low. Okay. Now, here's what happened yesterday. Something similar was happening on copper, but they tried to go higher around this time of the day, and then it got stuck in a range. So I'm not really itching to kind of go, yes, the reversal of the ADR low. It is one of my setups, but again, time of day a bit wrong. Even if it goes, I really couldn't care less. Selectivity, right? Selectivity over FOMO at all times. I'm losing the plot with chat and with and with questions. Hold on, I need to center myself. Miami Vibe Realtor says, good morning, are you using market profile? Yes, I am a profile trader. Not like just profile, because I don't actually agree with all the profile things that that people use, because profile was primarily made for equities. So I took that, I tested it, I threw away the setups that I found not useful for my products, and I added a couple. So this is why when people were asking me back in the day, hey D, how did you enter into this trade? And I'm like, oh, that was an auction fade. And they're like, what is an auction fade? Well, it's kind of a twist on the failed auction, but except we move further away, and then I have this ADR thing. And they're like, oh, can you show me? And I'm like, yeah, sure. This is how I went into coaching, right? I didn't go into coaching by sitting in my bed and going, how will I make, money off unsuspecting traders who want to learn how to trade? It wasn't like that. It was like, so many people were asking me how I enter some of my setups and how I'm able to figure out whether we are in a range-bound situation fairly early in the session, or whether we are in a kind of intraday swing session kind of thing, mode. And I remember back in the day, I had like 12 or 13 people around my screen, and I was like explaining them the setups. And then each individual person would either text me or they would Skype me, because I'm that old. And then we would try to talk on Skype through chat. And then I found myself explaining the same thing over and over to like a million different people. And it got so bad that at one point I was out for dinner with my husband. It was like a late Friday or something, and I'm like on my phone, like answering questions from traders, and he was just like sitting across me, just going, "Are you gonna stop now?" And I'm like, "But I just need to, we need to get ready for." It became like so time consuming, because I love what I do. But I had to maximize my time somehow. So my YouTube channel actually came about in 2015 by me posting a video to explain to the 12 people that I thought were going to watch that very first video where I have massive purple hair, how I use supply and demand intraday. And then I post that video, and I didn't even check it. And then a week later, I wanted to post another one, and I see that the video had like something like 30,000 views. And then, because I had back in the day, you could actually DM people on YouTube. I don't know how many people you know that. So I had like a ton of questions. Where do I learn this? Do you have a book? Do you have a course? How do I learn this? And I was like, no, no, and no. And it wasn't actually another 3 or 4 years before I decided to put my knowledge in anything kind of structural. And that's how the Market Stalkers method and courses came about, because people felt the need, obviously, to have something that is not like a 4-hour babbling webinar where they just throw concepts at you without actually explaining them first. So, take it as you will. Yes, I do sell courses, But at the same time, I'm very proud of what we've created. They are CPD certified. So I need as a part of CPD certification, we have to review them once a year. We have to see all the new questions that have come in. We have to review the data that, if something new comes in, I have to create a new lecture if the market conditions have changed. So it is updated every once in a while. And not always, right? But it's like every 2-3 years, I feel the need to add a lecture to it. And then sometimes, like COVID comes, and then you have to remake the whole bloody thing almost. It's like, oh, this changed. I need to add the whole sections about high volatility trading and what to look out for. So it's fun. It's very rewarding teaching people. It wasn't the plan. Initially I wasn't like, yes, I'm gonna be this like course creator. But I found incredible value in sharing my knowledge. Because, let's go dark again. Like yesterday, I don't know what it is. Like mortality is on my brain a lot these days. But imagine that I don't put anything into a course, and people still would like to know how, like the ins and outs of how I combine profile, supply demand, options chain, quantitative extremes, time of day. And if I'm 6 feet under, and I didn't create a course, I don't have any human children. I have dogs, so, they might be around for another 10, 15 years, but they can't tell you how I trade. Well, maybe Bernard can, but the rest of them, not so much. I have one dog that is extremely intelligent and uses buttons to talk to us. So when all is said and done, and when, we're all very old and stuff, what remains? And also, the idea of having kids to me was never that appealing, because I don't want to push any sort of unrealized ambitions onto my children. Not that I'm going to have any, because I opted out of that. But, what am I going to leave behind? So one way to leave a legacy is to leave knowledge, A knowledge not shared is knowledge lost. Isn't that the saying? So yeah. Take it as you will, man. But I don't know. It's just life took me in coaching direction, and here we are. We trade, we coach, we teach, we lose money, we win money. It's all for humans, right? So Mo is going to be here with me on Tuesday, I believe. So yeah. Mo says, one of my mistakes is to define a target day to pass and to get a payout, then to go live on that day. Yeah. Don't make time your enemy. You already have enough enemies in the market. Absolutely right, Mo. Absolutely. Yeah. Daniel says, Deeyana, always love tuning into YouTube when I can. Always informative on some level. Thank you for your time spent. You're very welcome, and thank you for spending time with me here, Daniel. Very good to see you again. Click the like, guys. Mo is saying, click the like. When Mo says click the like, we've got to all click the like. So, Greg, here's the thing. High resistance level, what are we talking about? 457. Yeah. 457, yes, but we have HVL and a gamma wall at 455. 457 is actually GEX1. Now, if we smash through core resistance, and it's a negative gamma environment, GEX1 is actually an accelerator. So I would actually expect it to get at least to 458, if not 59, if that's the case. Because GEX1 is not, like GEX1 is kind of negative gamma environment, GEX1. It literally says, buckle up, we're going for a ride, okay? And then it's like, woo! that kind of a deal. Gex 2 and 3 are stabilizers. They're stabilizers. So, if we smash through Gex 2 and reclaim it, then Gex 1 is going to accelerate that. Then we smash it to Gex 3 and the implied volatility for the day on the upside. So some slowdown I would expect to see at 458 and 459. But just because you have a high volume node at 457, on today's outlook, options chain is saying something different, okay? This is why I like looking at the options chain. It's kind of like, how would I put it? They give you like breadcrumbs of what they want to do with things. And if you combine that with the environment, either high volatility or low volatility, which you can see via the gamma condition, and then you just try and match all of those. So it's like literally like, it's a roadmap. It's a roadmap. And they're like screaming at you going, we're over here. Hi. And all the people are like, yeah, where's the moving average? And I'm like, F the moving average, man. Like, these guys are actually positioned here with the open interest. They're sitting there going, hello, we're up here. We're waiting. It's like your biggest nightmare to like scare you for your breakouts. And then you run into Gex 3 and they're like, and you're like, what happened? It's like, Gex 2 happened. Gex 2 happened, man. Another question, Paul H. Sorry, with great risk management, then the accuracy is less important. So here's the thing. I don't look at risk reward and accuracy as separate components. And I also don't look at time of the number of trades you do per day as a separate component. To me, it's all a part of your risk model, right? So if you do 3 trades per day and you have, let's say, 50% accuracy, but you're a 1-to-1, you're probably a break-even trader, right? Because that's what the numbers say. Now, if you nudge the risk reward to 1.3, while still not 3-to-1, but 1.3, just slightly over 1-to-1, and you're still at 50% accuracy, and you're still doing 3 trades per day, you start experiencing profitability, not like super quickly, but here's where everything changes. This is why I like the 2R multiples. You get to 2R, and your accuracy, let's say, falls to 43%, and you still do 3 trades per day. You are going to be wildly profitable. Now, you can optimize that by, for example, having some early exits, so you don't take the full -1R each time on the chin. So you actually exit, let's say, at -0.5 if it doesn't immediately go in your direction. Or, you exit 2/3 to the stop because you're like, well, actually, I don't want to take a full stop out. And it's not worked. Let me see if I can get another one at a better price. I do this a lot. Now, that lowers my accuracy, but it kind of saves money on that whole equation, if that makes sense. You're an engineer, you know what I'm talking about. And therefore, the risk model skews. So really net, because I'm coming out of the trades a little bit earlier without hitting -1R, net, my trades are really, the overall risk reward is closer to 2.3R and sometimes even 3R net. So if I'm always taking -0.5 as a stop out, early stop out, but I am taking the full 2R, that improves the whole risk model, right? So it's all like on a seesaw where everything's like you move one thing. It's kind of like a mixed desk, right? You move the base a little bit and then maybe you need to just nudge the treble a little bit, but then the mids are a little bit too much, so you push them down to create like that U curve. Then you find maybe that the bass is a little bit too boomy, so you kind of put a high pass on it. That's how I see the risk model. Musicians, eh? High Life says, always favor one child. Yeah, I will favor one child because some of them are, excuse my French, dickheads. Yes, I do have some dogs that are not very nice to me. Most of them are very sweet. Like Paul H met them on Saturday. So they're very, very nice puppies. But for example, some of them get into this overexcitable state and then they don't listen. So that's when it gets very loud. I get very annoyed with them. And then you also have Crichton, who loves kissing you. Oh my God. He will, like, if you need to exfoliate your face, just call Crichton. Like, you don't need retinol or retinoids. Just get Crichton to, like, go all out. And then he loves the garden. So I'm calling him. He knows his name. And he is very responsive in general. You say Crichton, and he's like looking at you. When he's sniffing in the garden, he will have selective hearing. And you can shout at him, you can do it. But until he's finished like chasing frogs or sniffing a new leaf or whatever, he will not come in. He will not come in. Just complete arsehole. But yeah, most of them are very sweet. All of them are very sweet. Just some of them are a bit weird. Let's put it that way. Two of them are a bit weird. I have the absolute legend somewhere in here. Oh yeah, she's behind me. Astrid, the one with the tongue. She's so cool. So we definitely have favorites. You know, whoever has multiple children and multiple dogs and they say they don't have their favorites, that's a lie. Yeah, Paul Ages even kiss me. I'm not surprised. Yeah, I'm surprised you still have skin. When Crichton starts to kiss you, you know it's real. He's crazy. He's absolutely crazy, yeah. Sarah says, sounds like my dogs. Well, I should meet them sometime. I have like a couple of slightly busier weeks, but you know, in September, Sarah, I definitely want to meet up. When MentorQ, how many times they refresh gamma levels? Can it be real time? You don't need real time, Cedric. The only time you need real time would be on equities when they go into one of those days where they just massively overshoot the levels. Most times the levels that we're looking at are end of day levels that carry on into the next day. And on commodities, it's like they even hold them for 2 weeks. Like for example, platinum doesn't really shift any levels for 2 weeks at a time. So it's like you come and you say, okay, well that's at 1450, and that's here, that's there. And then the next day, oh, okay, so core resistance still at 1450. Okay. Then the next day you're like, oh, okay, well this is just all the same thing. Do they not change it? It's because it's a thin product and there's not that much activity. Now, granted, ES and in particular SPY and SPX, they are more dynamic. So MentorQ do cater for that. If you want intraday levels, I don't think they're necessary, okay? If you want intraday levels on ES and NQ, you would convert them from either the SPY or QQQ or from NDX or SPX. So they have a conversion that you can do. And then you would just plot the SPX levels from an intraday indicator that they offer in TradingView onto ES and NQ. So, but you don't need it. Like most of the time, the price will oscillate around end of the day levels. They won't just, like you can have gamma shifts due to a catalyst. So if Trump opens his mouth and everything goes crazy, that's the time to look at the intraday gamma levels, right? Not before. And for copper, gold, all of my, weird products. So, RBOB doesn't even have options, so I convert them from crude oil. Natural gas, all of them generally stay within that range, and the reaction levels stay reaction levels from the end of day trading. So, yeah. I do trade options, VP. I do, yeah. So yeah, if you want to save a bit of cash or something on MentorQ, on my channel, you will find everything in that little thingy, but you have to go on my channel. So I did ask them for some like affiliate links and stuff. So I am honored. I'm honored. But yeah, if you want like codes and stuff, you're gonna have to go to my channel, which is in there. Yeah, I don't really like the whole shilling prop firm codes anymore, so I'm like, whatever. But I do like promoting services that help us become better traders, like things like Mental Q, for example. They're just providing levels, you know, they're not a kind of a direct competitor or anything. They make us become better traders by having insight into the options chain, and we can use that to orient ourselves better, whatever platform you're using. Gabe Garcia, is that a 15-minute FVG forming there? I have no idea. I don't think so. I'm not an ICT trader. I'm a profile trader. And for profile to have single prints, you cannot overlap with the previous one. So really, if I was looking at it in profile ways, the profile Jedi ways, this would be too small of a gap for anything. Now, here's the thing where people go wrong. They go looking for these bloody FVGs that they're calling them now, which are single prints, everywhere. They're like, whoo. So this is what I've seen one of my former mentees do. So she will be going, this is an FVG. And then we have another FVG here. Like literally she would have these like mini FVGs, and then she would be like, but there's also one here if we're going to nitpick, right? Because there was a space. And I'm like, what are you doing? What is all this? And she's like, oh, there are fair value gaps. And I'm like, what? What do you mean? Well, you know, ICT. I'm like, but fair value gaps are just like true, like from what they're like single prints, right? So they need to properly displace price. So that means they need to chew up, you know, in one go. They need to chew up the rest of the trending candles in order to be valid. What is this chewing up? It's not breaking structure and it's not breaking anything. It's just like chopping around in a range. So be very careful of how you use that concept, because I've seen many people use it in the wrong way. And then getting absolutely run over by price action that either chops in a range, or they're looking for an FVG as a continuation, but actually we're failing the auction, and then it just runs over. And from my understanding, there's an inverse FVG. In profile, it's all very simple. It's all just single print, and it's very, very visible. Very visible on the profile. You don't even have to look for candles. And what I find really hilarious is that some people who are reading FVGs, they're calling it tape reading. And I'm like, where's the dome? Where's time and sales? Where's your tape, mate? What sort of tape are you reading there? They're like, oh, I'm reading the 1 minute chart. Okay, that's not tape though. How did that come about? So then, you know, the things that I don't agree about with, but hey, if it works for you, awesome. Just be careful how you apply some of the concepts. Because from what I've seen people apply it the wrong way. And then I've seen people apply it the right way, looking for that bigger move that breaks the structure, that tells you, okay, we've been trending down, and then you have a big one candle on whatever time frame we're talking about. One candle that creates this single print, the FVG. That's what you should be looking at. That's your signal. It's not, oh, tiny FVG here that doesn't really break structure but gets stuck in a range. And like you need something that changes the market sentiment, the shift. Okay. So yeah, this is still a range to me. It's building structure. It's built structure. There's no single prints here. Paulite says Mental Q is a must for me. Been using it over a year now, and they have a ton of free videos explaining this stuff. Yeah, that's true. I do think their videos are a little long though. So I'm thinking of doing like a series on my channel. I already have like the script for one of them. Because when you're trying to compress, valuable information in like a 6 to 10 minute video, you really have to be careful what you're talking about. A2DY2DZ, effigies and proper. Yeah, but they've existed since 1986. They're called single prints. Okay? That's all I'm going to say. Let's move on from this. VP hit the nail on the head. I don't think technicals are a problem. Is the behavior of traders with the market. Yeah, as soon as something doesn't work out, they start misbehaving. Yeah. Why don't you add a watch list that we could, by one click, change the instrument? I do have a watch list, but I just don't really change my instruments that often because I focus on, first of all, I have all of them on my other 4 screens. And second of all, I have a watch list. This is my watch list. These are my favorites. And I will only focus on a particular asset class or a particular product for the day because I do my research. So I don't need a watch list. I'm not going to be jumping from NQ to platinum to ags to, lean hogs and soybeans. Never really traded those in my life. So I did like cattle maybe a couple of times and lean hogs with the help of Coach Hoop. But no. Yeah, so silver just puked. So here's the thing. Gold, like I said, has the 3420. 3420. This could now be like starting the pre-market ahead of the LME. So things start livening up. But my setups, my actual setups, are only for the next at least 20 minutes like into the LME session. That's when I start looking for my setups. So one of the setups would be on gold to touch 3420 and then to reverse. And for that to happen towards the second part of the LME initial balance. And strangely I use the initial balance as a 40-minute measure. It's a bit weird, but the data was telling me something with a slightly shorter initial balance. So I've been using that in the last sort of 6-7 months, just testing it. You can trade cattle. Oh yes, you can trade cattle, you can trade soybeans. In fact, I probably have some of them on here because I do pay for YM, and that's technically CBOE. So here we go, soybeans. Do I have cattle? I don't have cattle. They're not open right now, so you can't trade them now because they still have the same. So I have corn, soybean oil, soybean meal, all because it's a part of CBOE, but I don't trade them. And wheat. Literally never even looked at wheat. I looked at coffee at one point, never looked at wheat. So yeah. You don't have to trade everything, but if you have a system, the problem with the ags is that they have this like weather and macro, like fundamental picture that you really need to know a lot about in order to then place the technicals that would speak to that picture, because that's how they work. Even though technicals probably work better, like let's say VWAP will work in any market. But should I go long? Should I use it as a stopping point? Should we chop through it? Like how and which side? If it's a range, which side should be stronger because of the macros that we have? That is the part that trips me up for ags. So that's why I would need, and I don't do anything halfway, so I would need a lot of time to learn about the harvest and the crop year, all that. So I know from my Series 3 how to calculate profit and loss, what sort of tick size they have, but practically I have not really ever traded ags, so I'm not about to start now. I'm way too old. My memory is at capacity, so while I can learn little bits and pieces to kind of add to my existing knowledge, that's fine. But at almost 45, I'm done with learning big, big things. And I'm just tired. I'm just at capacity, tired, slowly getting senile as well. I found myself like repeating things. Like, for example, let me give you an example. Yesterday we were going for a dog walk, and I'm somebody who has an enormous memory, right? I have photographic memory. I remember everything. Up until about 6 months ago, I started to notice that there are certain things that are not really like they used to be. So yesterday we're going for a dog walk, and we get into a car, all the dogs are in the car, and we have a really nifty system where we open up the garage, which does have like an outer exit to the garden, but when the garage is closed, nobody can come out that way, right? So it's like dogs are safe, everybody's safe. So what we do, we have a system where we use the garage to load up the dogs in the car, and then we drive them out, right? So everybody's in the car. We get in the car, and the field is only like, literally like, I kid you not, a minute down the road. You get in the car, drive for a minute, you're like, we're there. That's how close it is. It's crazy. But we still have to get them because it's like 15 minutes walk, but a 1 minute drive, if that makes sense. So anyways, we get in, and I say to my husband, because it's a private field, it's got a protected gate. It's like on a schedule, you have to pay for it. So I get in the car, and I tell him, yeah, the code is still the same, blah, 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 right? And he goes, okay, thank you. So I start driving, and I'm driving, and 30 seconds into the thing, I go, same code still, right? And James was like, yeah, you just told me. I totally forgot. Actually, is that senility? Is that a senior moment? I don't know. What do you guys think? Is that what, like, if there are older people than me, is that what they mean by senior moment? Is that what starts happening slowly? So, and can I do something to stop that? Obviously, we have to use our brains a lot as traders, so I'm hoping that the neuroplasticity is going to stay. But I'm a little bit worried. I'm not going to be lying, I'm like, is this the start of it? Granny D. Steve says, curious as to how you think one can improve their win rate. Well, it would definitely need more context, Steve. I mean, maybe we can talk about it tomorrow, because it is a loaded question. But some of the ways to improve your win rate is to be more selective and to stop messing around with your stops. So wider stops, selective trade locations, just like off a very bird's eye view, sort of what you can do. And then, like, for example, I see a lot of people using stops on gold that are like 35 ticks. But given the fact that at the moment, gold has... Where's my gold chart? Where's me gold chart gone? There it is. Okay. The gold at the moment has an ADR, so over the last 10 days, of 327, using only a tenth of that range for a stop loss, I would say is super tight. And unless you plan your trades to only last like maybe 3 to 5 minutes, it won't be a stop loss big enough to absorb some of the more volatile instruments. So it's going to knock you out and affect your hit rate. If you don't want that to happen, size down, increase stops. In fact, right now I'm using anywhere from 45 to 70 ticks stops on gold, because I don't want to be whipped out. Like, for example, right now on here we have a reference low. We have a reference low from what will become an overnight at 423. But I actually have 420 as my ultimate GEX4 area that has the highest concentration of open interest out of all of the options levels that we have available today. So that means if I enter upon a liquidity grab around 34.22, I would actually need to place my stop down at 34.17. So that would be a large enough stop loss for me to try and run a swing trade if that's what I'm aiming for. Small size, slightly bigger stops within reason. Don't go to 300 ticks because that's your entirety of the daily range, and therefore you won't have the positive risk reward space inside that range. That's something I also look at. But yeah, if you become more selective, look at the swing extremes as trade locations. That's also a way to improve accuracy. So instead of looking at trades in the middle here, where do you have your swings? So have a look at the 4-hour chart, or even a 1 hour, anything. So the swing high is all the way up at 34.44, but okay, it's a little bit of a bigger time frame, but let's have an hour. So hourly, this low, actually, where I just put it, so 34.23, that's the 4-hour low. Where's your 4-hour high? 34.34, almost 35. That's your high. Try to avoid trading in between those. See whether that improves your hit rate. So selectivity, is that a word? I don't know. Selectiveness, selectivity. It's really down to market structure and you waiting for better trade locations. And that naturally, if you give it a little bit more room and give it time to breathe and don't overmanage your trades, that's how you can improve your accuracy. Now, for me, intraday, I would argue that while some people are successful trading with 30% accuracy as swing traders, I do believe that as intraday traders, we do need to maintain between 40 and 60% is perfectly fine if you have a positive risk reward. With the same sort of similar selectivity, but just allowing yourself a few more swings at the bat, especially if you're okay with, like me, I'm very good at exiting the trade early because I think it's not doing what it should be doing. So I'm absolutely fine closing it earlier. And then trying again, maybe at a better price. So think about that. Hopefully that helps. But yeah, tomorrow we can maybe get more context from you. And then we can dedicate, some time to be talking about that. Michael B. is senior moment at 25. Mate, I'm going to be 45 in December, but thank you for that. Nice comment. Should buy you a drink for that. You thought I was 20 years younger. Another Mo says, looking for golds on long D after that 26 level retest. Yeah, quite possibly. If you look at the daily chart development, because I have this supply up at 34.58 as sort of orientation and an ultimate target for this move. So we have this combination of rally, base, rally, base, rally. So I'm hoping that's going to continue. Obviously, nobody knows. But just given the fact that, I think we're still in positive gamma, there's a good chance of repeating that pattern, right? And if you see here, it narrowly misses the demand. Are we close enough for it to miss? We'll see, right? It might whip it back down to sub 34.20 and then reverse. But unless we get some sort of catalyst or news, I don't think that anything's changed here. So until we reach the ultimate stopping point for the train, let's say this is London and that's Paris, right? So you wouldn't jump off a train when you're crossing the channel, right? Just go for a swim. So until they reach their ultimate sort of supply area where we've been reacting from, I don't see much reason for this to turn around. It doesn't mean that it won't, right? You have to keep an open mind. But the structure and the probabilities of how these things work usually gets over to the other side at some point. Whether it's going to be today or tomorrow, I can't tell you. Because we might just stay as a bearish candle and then tomorrow we push it. If you see the one bull, one bear, one bull, one bear, one bull. So maybe we stay here. Maybe today is not the day for the longs. I don't know. We'll see later on. Anyways, my lovely Euro traders, that's it for today. I will see you tomorrow for another Euro trade, and then I'll see you on Friday when I'm going to have Joseph A. once again with me for Lunchbox Trading, so you will see me more this week. But yeah, and VP says my win rate is high, 70 to 75%. My only issue is I let my losses bleed a lot and go until sometimes. Yeah, that's because you have a high win rate that is generally unsustainable over long periods of time. Are you basing the win rate on a big enough sample size, 6 months to a year? If not, I would say base your win rate on a larger sample size. Yeah. Anyways, with that lovely enlightened moment, I will bid you adieu, and I will see you very, very soon. This was the Euro Trader, Market Stalker D. Please hit the like on the way out, and if you're not subscribed to the channel on YouTube, definitely subscribe. I wish you a great day. Trade safe, and I will see you soon. Take care.